Hey, what's going on? What's going on, guys? Get started here just a second. Let everyone roll in. I think everyone's probably still getting pinged right now. And we'll get started here in just a second. Let me actually take a look at something real quick before I start, also. Let's see. Today is September 6th. Yeah, relatively quiet week. So kind of just as everyone kind of rolls in, the kind of things that just caught my attention. It was just looking and catching up on the economic calendar, basically, trying to see what's actually coming in ahead. Tomorrow it does look like we actually have Fed President Mester speaking tomorrow, and at 10 a.m. Eastern, and then we also have Brainard speaking at 12:35 p.m. Eastern tomorrow, and it looks like there's only one other speaker. Oh, we have the Beige Book at 2 p.m. And then lastly at 2 p.m. also we have Fed Vice Chair for Bank Supervision, Michael Barr speaking, which I think that's not really going to be anything significant for the market. But the highlight will likely be Mester speaking, Brainard, and the Beige Book. I think is the highlights tomorrow. So that's all going to happen between 10 and 2 p.m. tomorrow. I think that's pretty much the biggest highlights to likely watch for tomorrow. Today, I didn't really see anything that jumped out to me per se in terms of market direction. Kind of feeling like the Bears are relatively still in control. We basically saw the decline that we had for most of the day, but today felt like more so like a premium chop kind of day. That's really what I got from today's type of price action. Obviously, it looks like there is some kind of sympathy run that's going to take place on this market here this particular week. But the question is how soon that ends up coming because as of right now, with the Bears kind of pressing into these lows, I think everyone wants that gap fill that if you're looking on SPY directly, because I do have ES pulled up, if you actually look at SPY, you actually have a gap that's sitting down here under this 380 level. I think that's what all bears have in their sight right now is looking at that gap fill under 380. And so it does seem like that gap is more so more enticing to be filled before we see any kind of relief rally. And whether that be end the back end of this week or that actually be within before we fill that gap. So that's what I'm actually more so at right now in terms of just looking at the market in limbo right now. We saw some names kind of get some early pressure, then we saw the relief. We saw Tesla actually have a nice little rally here today despite the market price action. So that was all pretty much taken into consideration. But again, biggest thing is looking at that gap fill towards 380 on SPY relatively. I think that's what all bears are pretty much just looking for right now. All right. Juicy, what's going on? What's good afternoon? Bowman, Bear Drake. I mean, right now I got nothing to say but to be a bear right now. The market, that's what the market's gonna give me. That's what I have to say. But the fact that we've already seen how many consecutive days the market's been red, how many consecutive days we've been down more so, you have to see that there's going to be a light at the end of this tunnel. Again, the question is, do we fill that gap before we see the light at the tunnel, or do we end up seeing the bulls try to take some control here, give us the relief before we get that nasty rug pull from a higher level than where we're sitting at right now? All right. So if I'm pretty much looking at in terms of pretty much looking at bears right now, if I'm a bear, I pretty much want to see us start to sink here under this 38.60 level. That's where I think we're going to end up seeing it, and we can see that breakdown right towards 30, pretty much 3,800 down towards 3,780 is what I'm looking at in terms of that zone. Because you know that we typically overshoot to the downside, especially when there's volatility included. So if we're gonna end up shooting down towards that gap fill, I would anticipate that we end up overshooting to the downside, and that would pretty much put us down towards 3,780 on ES here. Is what I'm looking at. Otherwise, the bigger level that I'm still looking to pretty much build right off of is where we basically started the day off this morning, is reclaiming over 39.50. Over the 39.50, you want to see continuation over 39.83 is what I'm looking at for continuation up towards this near this 4,000 mark is what I'm looking at. So that's pretty much just vice versa. The gap fill down though is just scary. I think bears are just hungry, and I'm more inclined to say that with the bears in control, I see the downside, in which I'll also show you one other thing as well. All right, Lobo, what's going on? ¿Qué pasa? So two things actually caught my attention this morning as well. One thing was pretty much looking at the dollar. That was the first thing, of course, that caught my attention. We see the dollar continuing to surge. You see this off of the daily chart here, and if you actually notice, this is pretty much the inverse of what my favorite chart is. Usually, the my favorite chart is the descending broadening wedge. Here we have an ascending broadening wedge. So I'm inclined to say that we're likely going to make another push up towards this resistance of this broadening wedge, in which case that would also give us our decline towards that gap fill on SPY that's down at 380. So I do see the room to the upside here on the dollar to surge, and vice versa. That would pretty much give us the leg down on SPY towards that gap fill below. All right. So I am looking at this. That likely puts the dollar up here right around this 112 to 112 half roughly up into this resistance. And you could probably mark this off as saying an A, B, C, D. And then you're likely going to make the E leg before you see a relief in the broader market. So that's what I'm particularly looking at. Christina, good afternoon. As you mentioned, I was just talking about the gap fill. You're looking at 383. There's a gap fill sitting right below the 380 mark. And that's what I'm looking at, vice versa, in terms of the dollar surging. That would be in pretty much cohesion with the SPY pretty much getting that leg down towards that gap fill. So that's actually what caught my attention this morning as we basically made another high on the dollar this morning. That gave me that indication that we were likely not going to see any kind of meaningful reversal as we continue to pretty much chop for most of the day. So that was the other thing. And then lastly was also looking at the 10-year yield. Those of you that pretty much know, I usually always pretty much look at the 10-year yield as well. So that was pretty much another one that's continuing to surge. It's looking to basically take out this high from June 14th. I was sitting at, what is this, roughly three half is what the 10-year yield was looking at. So I would not be surprised to see the 10-year yield right back at that three half basically. And with the dollar surging, that does not smell good for SPY, giving us any immediate relief until we end up likely seeing this next strong leg to the downside. All right. So all of that pretty much hopefully just gives you one plus one. Basically gives you that next leg down on SPY. You see the dollar surge, you see the bond yield surge. That likely indicates that we're likely going to get SPY pretty much to the downside. So I'm not banking on the fact that we're going to get a relief rally just yet. I would count on the fact that we see one more leg down, then we can start to pretty much look for that buy the dip type of opportunity, that relief, and then we should likely end up seeing that towards maybe end of the week, or rather more so the beginning of next week. All right. With any luck, got a trade on S triple Q that I hope takes advantage of a lower SPY. I would anticipate that. I think everything pretty much points to that, Christina. So I can't blame you for that trade plan that you put in place. The only thing I could probably say is that just make sure that you have the appropriate stops in place. All right. If in the event things do not go as planned, but according to what I'm looking at, I think everything aligns for us to take that leg down. And then hopefully the Bulls can kind of get some kind of sigh of relief and we can start to get some legs back to the upside. Of course, one of the biggest highlights was also watching was keeping an eye on the chips. So that's going to be something I'm going to continue to watch is looking at those semis tomorrow. AMD has been one that's just been getting slaughtered for the most part, along with Nvidia. So you pretty much close enough to my down here support and also the median of what is basically a descending channeling action off of AMD. If I kind of just zoom out, you can basically see that it's a little bit of a descending channel. It's actually respected the resistance to pretty much the median of this entire descending channel action. So I'm looking for a breakdown here on AMD below, pretty much sitting at 78.70. This should take it right down towards that 77.39 mark, and that should be a beautiful breakdown that you're looking at towards that 75 half, sitting right at the median. So 75 it would be pretty much ideally my buy the dip spot, and hopefully that lines up which we're going to end up hopefully seeing a reversal on SPY. But that'll be one I keep an eye on. Otherwise, reversal to the upside here. You're looking for this to pretty much reclaim over 81 and a quarter here, 81.25, and we should start to see this try to make its way up, staircase up, back over 82 half, and potentially bigger target would be towards 85. All right. So that's one I'm going to keep an eye on. Nvidia, same pretty much same sector. Like I said, I was keeping an eye on semis. This is another one that I'm going to keep my eye on. This one's just been getting slaughtered. In terms of pretty much support, I actually don't have some meaningful support on this one though until 128. 128 low is what I'm looking at. To be exact, that level is 128.32 is what I'm looking at for support. Otherwise, then I'm looking to pretty much retrace to the upside if we get a meaningful reversal to basically retest that 50 EMA on the weekly here, which is sitting at 145. I know that I believe was it maybe yesterday more afternoon or yesterday evening. I think Avery was talking about this going back to that $200 mark from where it potentially broke out from to retest. That's entirely possible, but I probably would say that's going to likely happen if we end up having a Santa Claus rally towards the end of the year. But that's a bigger, larger degree move that he's pretty much watching. If I'm watching just more so short term this week, next week, I think once we end up finding some support around 128, I can see a pushback up towards 145 that's going to be aiming for, and that'll likely end up acting as some resistance for quite a few days. All right. Let's see what else you mentioned. AA, is there somewhere I can find all the important Fed dates that move the stock market? Feels like there are so many, and I'm trying to avoid trading on those days. Fed dates, you can pretty much use any kind of economic calendar. If I give you one that I'll probably just drop, like this is one that's pretty much just off of Market Watch. If I drop that one in the chat right there, you can pretty much use that. I know the other one that I believe we typically use also with our newsletters. Investing.com, I think that's pretty much the most well-known one as well, is using investing.com. The only thing with investing.com is that you have to go through and use all the filters and take out all the other countries inside and just pretty much keep the US only. So, but that's the other one. Either MarketWatch or investing.com, I think is probably the best two that I could probably say about. All right. Again, other than that though, the semis are gonna be on watch tomorrow. Let's see if we get any kind of relative strength out of the semis, and then if we can see the semis start to give us any kind of relative strength, then we start to look at the three-headed monsters, looking at Apple, looking at Microsoft, looking at Tesla. Otherwise, vice versa. If we do end up getting the leg to the downside, watch for the early weakness off of semis, and then watch for those three monsters to the downside to pretty much follow suit. So Tesla kind of gave you that relative strength today. I think that's also one that should relatively be on the watch list pretty much tomorrow. Let's see if that relative strength ends up keeping up tomorrow. It actually smacked its head on some pretty hard resistance here today. As you see, I pretty much have two lines. You have the EMA. I also have an anchor VWAP sitting at that 275 high. Basically, you can call it 276, and it ended up rejecting there um, earlier this afternoon. So that's when I'm going to watch to see if we can reclaim over 276. We reclaim over 276, then you're looking at hard resistance sitting at 281. And above that, then this can start to have some legs towards the upside, and we could see a bigger relief, likely pushing up towards 295 half. All right. Otherwise, if we end up taking out today's low at this 266, then you pretty much look at 258, and then below the 258, I don't see much room down until we end up smacking. What is this 250? 250 half is what I'm looking at towards downside. All right. Let's see. What is my main trading style? Trying to figure out what kind of style I should learn from. Everyone has different styles. I mean, mine. I'm more so now at with, no, with everything pretty much being broken in terms of patterns because that's usually what my go-to style is in terms of bull market. But right now is actually more so EMAs. I think right now EMAs and anchor VWAPs are more so my biggest in terms of telling me where the bleeding is necessarily going to end up potentially stopping, finding short-term support, finding those pretty much those bounces. And which if you actually notice in bear markets like this that we've pretty much had all these multiple red days, you actually notice that when you actually hit a key support level, maybe end up being a key EMA support, a key anchor VWAP support, you end up noticing that you get pretty much these hard bounces, these hard reflexive moves right back to the upside. That's why this pretty much been more so a key for me right now. I was looking at the EMAs and anchoring VWAPs right now. You could put your anchor VWAPs towards the month, the beginning of the months. You're looking at monthly anchor VWAPs, also looking at weekly anchor VWAPs, or you can also put it at whether it be at a previous high or previous low. And that'll likely give you some bigger gauges in terms of those turning points that you're looking at in terms of those key short-term support levels or the key breakdown levels for further blood. All right. All depends also on what time level you're looking at it. All right. But the EMAs I think are pretty much my bread and butter as well. You look at the 20, look at the 50, the 100, 200s. Definitely gives you the bigger picture of where potentially your breakdowns are or your retest on any particular reversal. All right. Now Lobo, can I look at Disney? Sure, I'll peep Disney. Did it actually have any strength today? Actually, no, not really. I mean, Disney didn't do too much. It's definitely been on a hell of a little breakdown. Since it ended up having its earnings, I actually thought it was gonna make it up towards the 50 EMA. Once it ended up having earnings towards that 135, but of course, market volatility that did not end up happening. Now, biggest thing I can see is pretty much you ended up breaking below that EMA. 112.77 was your key support level. You could basically see that you basically broke under. You have that nice little support that you're trying to reclaim over today. That's why you see a little bit of a recovery today. right around that 110 flat mark. You basically see you close right over that 110. That was your key support level that you wanted to hold above. And I could potentially see, if I'm actually trying to read you right now, El Lobo, you're looking at a potential inverted head and shoulders here off of this weekly. Is more so what you're probably looking at in terms of looking to buy the dip on this. If I'm reading you correctly. So it is possible you do have an inverted head and shoulders playing out, but in order for that to play out, you'd have to have some broader market relief right now. So that's a matter of pretty much timing that bottom of what we're looking at in terms of the, if you heard me earlier, in terms of SPY filling that gap, I would feel a lot more comfortable once SPY ends up filling the gap, more so to buy the dip here on Disney than rather to try and say that this is an inverted head and shoulders prematurely. And then if SPY ends up melting down towards that 380, you're going to end up getting caught holding the bag. So that's pretty much my concern. Ideally, I like to spot here. If you reclaim over 112.77 here, in terms of getting a continuation, I would ideally want to see you get over this 114 mark. I see that you have your price target at 115, but I think tomorrow's price action in terms of the broader market will likely give you that bigger picture if you're going to get that break over 112.77. And bigger thing is if you can hold it to get to that target of 115. So that's pretty much the bigger thing. But I do like the setup here. I like what you're pretty much eyeing. So you should potentially start to make a higher low here tomorrow. That'll be the biggest thing. So ideally, your high should be over this 111 half tomorrow. And that'll start to build your higher low to get that curl to the upside off of this inverted head and shoulders if it does indeed play out. But biggest thing is, of course, keep an eye on the broader market, because if we start to melt on SPY and we start to tread down towards that gap fill and blood is pretty much on the streets, that's not going to aim well for pretty much holding that inside of it going to 115. All right, but you should potentially make a higher low here, and you should get the break over that 112.77 off of the weekly EMA here. All right, I do like that one. That's a pretty nice setup there, though. Do you have for setup? Do you look for setup sort of a conservative trader that looks for volume and price? I definitely do that in terms of pretty much having the volume. Pretty much agree with it. Looking to pretty much see an increase in volume. Looking to also see in which terms you end up reclaiming the EMAs. Like I looked at Disney here right now. I wouldn't feel comfortable. Maybe Aloha probably took a starter position. If I'm probably guessing that he maybe did on Disney, I would actually wait for the reclaim over the EMA and then look to see if we get pretty much the continuation is what I'd be looking at. Now, that's pretty much the bigger thing that I'd be watching for. Now, I usually end up watching, I do have an indicator, which I end up looking at for the volume here to pretty much agree on this. That's what I'd be looking for to see an agreement tomorrow. If we do end up starting to make higher lows here, I do want to see the volume start to pretty much rather increase with it rather than pretty much fade off of this little basically trying to make a higher low and the volume's not basically in agreement. So I do like that, but I usually use the confluence of the EMA plus the volume in agreement, and then we can start to see whether you're going to end up getting the follow through over the break over the EMA or you end up getting basically a fake out. All right. So that's pretty much looking at Disney. I wonder how Walmart's actually doing. I love, but how's Walmart doing? I'm sure you've probably looked at Walmart. Damn, this thing's actually not doing so well. Yeah, it's not looking too pretty. I will say it basically broke trend line. It doesn't look very convincing. If I basically draw the trend line here, pretty much stating, as of right now, it looks like it's basically retested prior trend line support, and you got a breakdown. So that does not look too pretty to me. As of right now, I'd want to see this basically reclaim over 136 here on Walmart, and I'd probably feel a little bit better in the case that it's going to retest the trend line towards 143 half. But right now, Walmart does not look too hot right now. I'd probably stay away from this until it ends up reclaiming over 135 half. Let's see. A can I do ABT? Isn't that Abbott? I think that's Abbott, right? Yeah, it is. I haven't looked at this one. I know that if I remember, XLV has not been doing too hot. In which case, healthcare has actually been pretty weak. I will say though, I actually do like the spot that you've actually caught this one on. You're sitting on some nice EMA support here on this one. So I will say that's actually a very nice little support level that you're watching. Is 101.69. So you did close relatively above it. It did show a little bit of relative strength compared to the broader market. So 102. 101.71 is your close. You're looking for support at that 101.69. If I were to tell you in terms of stop loss here, I would say you definitely want to see this hold above that 100 mark. You could basically see where you previously broke out and where you ended up retesting from previously. If I basically zoom out, well, try to zoom in, you could basically see from April 20th of 2020, you put in a high at that $100 mark on the dot. You ended up pretty much regressing, chopping, and retesting that $100 mark right on the dot yet again. So that 100 mark on ABT is definitely a key level to pretty much hold. So ideally, I do like the spot if you're looking for an entry point here on Abbott. You could basically see that perfect little descending channeling action. You could probably draw some kind of falling wedge action. But more importantly, you have the EMA support at 101.69. That should act as your first level of support. And that $100 mark on the nose that ended up acting as your April 2020 resistance, that ideally needs to hold and should act as your stop loss if you are taking an entry here. But I do like that one. In terms of PT, of course, you're aiming to basically reclaim a 111, and then you can start to see a more meaningful continuation and momentum to start to build. All right. Walmart 140.0916. I have bought time. I don't mind that. I know that you typically like to get your entries a little bit earlier, so I wouldn't doubt you pretty much getting into that. I ideally you want to see that get over that 135 half. I think that's probably the level that you're going to be looking for that breakout to get a continuation off of it. But if I were to tell you in terms of just having a stop loss, keep an eye at this 130 flat. 129.97 is ideally where I would pretty much look to see being your stop loss on that one level. Because if that ends up failing, this might end up just pretty much ideally just looking to be a little rising wedge. Or if you want to say, if I probably put out to the month, it'll look like a little bear flag. And then that's what you want to be cautious if it cracks under that 130 mark. Let's see. Any thoughts on Apple iPhone event tomorrow? So biggest thing, and I think those of you that probably have played Apple a lot for any event that they've had, they typically end up selling off for every event. Now, the only thing that's actually in question here is that if we do see any kind of broader market relief, or if in fact we end up seeing Apple act as how Tesla did today, in which it ended up having some relative strength compared to the broader market, that would be ideally what I'd be watching for on this one. You do have resistance sitting at 157, 157.15. Let me peep the daily on this. Uh, See how the monthly's shaping out to be. Yeah, I do not like that monthly. That monthly tells me that you have more downside. But I mean, as far as this week in particular, I think you can get a little bit of room to the upside here. Ideally, if you can get a break here tomorrow over 155 half, you could trade it up towards 157 and a quarter. But I don't see much upside beyond the 157 and a quarter, if I'm being completely honest. I have a resistance sitting right at that 157 quarter, and then you also have your EMA resistance right at that 157 a quarter. So not too much overhead room if you're trying to play the upside. I would more so be in the camp that if this ends up getting up to that 157 and a quarter, and likely before the Apple event, I would look to particularly short it, and then hopefully you pretty much end up getting an onslaught in which we were pretty much talking earlier about SPY getting a meltdown towards the gap fill. It all depends how quickly we see a leg down. But I would not bank if we do see any kind of early signs of relative strength. I wouldn't bank on that end up continuing to hold for much long after that event. If in fact it actually ends up selling off once the event ends up starting. So 157 a quarter, that's pretty much my upside I would watch for you. And then you're watching ideally for 155 half to break before you even get to that 157 a quarter. And then if we do get to the 157, watch for the breakdown right back under that 155 half. And then you're going to watch for it to basically take out today's lows. All right. What constitutes a real break? How can you tell if it's going to bounce if it crosses the line just a little? Well, once you end up crossing the line in terms of EMAs, then you're starting to use the EMAs as basically a stop out. Because if, let's say right now, tomorrow, I'm watching for a breakout on Apple here, right? And I'm looking at this off of the daily here. I'm looking to basically reclaim over 155 half. If I don't necessarily get a follow through, or now I actually have a stop limit in basically off of this. Now I don't want to necessarily get wicked out over that, right? So I'm going to be looking to basically take out that next level of resistance sitting at that 157. So if you don't get the continuation off of this necessarily, and you end up getting a stop out, that's why it's important. You usually hear a lot of people say, I raise my stop, and I think Sig and Dapper are very keen on that. when they do their live trading, they usually say, "Oh, I'm moving my stop up. I'm moving my stop up." That's one of those cases where, as you see yourself starting to make break over a key level, now you're having a stop, and that way you don't get wicked out and you don't end up getting caught holding the bag. So whether you end up setting that stop limit manually or you have it, or you're doing a mentally stop limit, that's pretty much where you have to decipher on how much and how big of a stop limit you want to end up putting in. All right. Apple Inspire tracking shoulder to shoulder. What do you mean tracking shoulder to shoulder exactly per se? I mean, they are the two leading whales pretty much in this market. It's Apple and Spy. So if you're saying they're moving side by side, more than likely, yes, that is the case. Microsoft was another one. I know pretty much talking about the three-headed monsters. I was watching Microsoft today. That was pretty much when I was watching for to see if we had any relative strength. I saw that one starting to push green, but obviously it rolled over with the broader market, kind of sitting within two of my levels of resistance right now. 252.11 to the downside, 254 half basically to the upside. I would favor the upside if we get the break over 254 half. I don't have any relative resistance until we get up towards 258.42. So I do like this, and if we can get a little bit morning relief, maybe giving an Apple a little bit of a run ahead of its event, that would likely be a beautiful one. So I'm going to be watching Microsoft more so. I think Microsoft has a little bit more in terms of upside rather than Apple, but I pretty much either one of those would be pretty much sufficient if we do get some kind of meaningful move to the upside tomorrow. What is a stop out? Like where I put my stop loss? Sorry if these questions are big. Yeah, a stop out is basically where you end up putting your stop out. So let's say you enter right now, and I'm just going to give you a random hypothetical right now. Let's say I enter Microsoft right now, 253.25. How would I know pretty much when to exit my position? How would I know should be my stop loss, quote unquote? I'm looking right now. If I'm looking at my chart right now, I'm looking at my stop loss pretty much at today's low is what I'm looking at ideally, if you want to say. And that's sitting at 252.11 is what I'm watching for. So ideally, I want to end up getting in here, having my stop loss set for that 252, or you could either rather do it on a percentage basis. So if you see that your position's down, say 15, 20%, okay, now that ends up being a stop out. That ends up being a stop loss in which now okay now you move on to the next pretty much the next trade. All right. Just that they're moving together. That is correct, Christina. I was just pretty much. That's why I say tomorrow, likely whether we get an upside or we get a downside. Look at pretty much my first decision. I'm gonna be looking at, of course, is looking at the dollar, looking at the bond yields, right? Behind looking at the dollar and the bond yield, next thing I'm gonna look at is looking at the semis. Look at Nvidia, look at AMD, see if there's any kind of sign of strength or weakness, especially since there's been multiple days of weakness off of the semis collectively. I want to see if there's any kind of strength there or any weakness, and then look to see your three-headed monsters pretty much follow suit, whether it be to the upside or downside. Tesla, Apple, and Microsoft. All right. Woo, I actually already went over Tesla. If I pretty much give you just a quick rundown on that off of the daily here, we ended up smacking some pretty hard resistance at 276. If we can get the break over 276 tomorrow, I'm watching upside towards 281 is particularly what I'm watching. Otherwise, we get a break under 270 here, I think we pretty much have room down towards 258, which is going to be rather disgustingly ugly, with the market likely end up also taking a leg down towards the gap fill sitting on SPY at 380, and that's going to be a pretty nasty rollover for Tesla that's on the way. All right. Christina, but you do need to give the stop loss some room, otherwise you get stopped out. That is actually very true. It all depends also what is your pretty much your portfolio size, and also pretty much how risky or how volatile of a ticker are you entering, right? Because let's say my stop loss that I enter on a ticker, say like Apple, may not be the stop loss I enter on a ticker, say as per se like Tesla, because obviously the volatility is a lot more different. Apple moves a little bit more slower compared to a name like Tesla. So that all depends, all deciphers, and then you have to be more so willing to say, okay, am I comfortable losing 25% of this position? Am I comfortable losing 15% on this position? So that all pretty much depends on the trader, pretty much the portfolio size, and the ticker that you're trading. All right. Other than that, I think that's pretty much a wrap for pretty much everything I went through and the tickers requested. So I will leave it as that. Again, we do have two or three speakers tomorrow. We have Mester speaking and Brainiard speaking tomorrow as well. So be on the alert for that. Mester's at 10 a.m. Eastern, and then Brainiard is at 12:35 p.m. Eastern. We also have the Apple event tomorrow, which I believe is around 2 p.m. if I'm not mistaken, if not 1. So that's pretty much the highlights tomorrow, and we'll see how that ends up pretty much playing out. I also heard someone say to use the tick to decide if it's going to bounce. How would that work? That's an entirely different thing. Juicy. That is actually the correct thing though. Using tick to pretty much decipher your entry and your exit points. Usually, no, that's pretty much where you have to go through the levels of tick and understanding your high tick, your 800 tick, your 1000 tick, and then vice versa, the negatives of that. So that's pretty much something that you could probably, I would likely say that there's YouTube channels on that you could probably Google. Or if not, I believe if you actually attend class or there's maybe a video, if you can actually comment in Discord, I believe we may end up having a video on that as one of our education lessons. All right, and you could probably drop the link for that. Other than that, though, guys, I will sign off. That'll pretty much conclude today's session. I appreciate you guys all joining.